A couple of interesting years for Disney. Their streaming service, their resorts, the cruise lines. Have they got through the COVID pandemic? An interesting fundamental setup there with Disney. But what's going on with the price? Where's it going to go next? In today's chart of the day, I look at the technical analysis and try and unravel the picture and see what is going on. Hello, I'm Stephen Ho, trader and founder of The Stop Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. Straight into the line break weekly chart for Disney, and the first impression we get from it is after that initial COVID, call it price shock down to lows in March of 2020, the price has actually recovered very nicely and saw recent highs around the 200 area before pulling back off. Now the usual Fibonacci analysis shows us that we got a lot of noise around the early 170 area for potential support if it wants to push higher, and if it breaks down from there then it is a long way back down to the 61.8 and 50 sort of percent price range on the Fibonacci there between 154 and 141 dollars. And again, a lot of noise around that 38.2%, the 127 dollar area, but at the moment it looks like it's consolidating around that early 170 area with maybe the idea of pushing higher, maybe tie that in with any fundamental changes around the company opening resorts, development in products, and I suppose more of an interest in the stock. But technically in the weekly line break chart, reasonably positive, and in the last few weeks looking to turn up in price. The Heikin-Ashi daily chart is also looking quite positive. If we go down to the bottom straight away, we'll see the bottom two indicators there, both indicating bullish signals. Our volatility, that red line in the middle, starting to pick up around the 30% annual volatility. Interestingly, looking at the volume, a lot of green volume days, and we've had a recent spike as that price broke up and out. If we look straight up to the price action out through the nice triangle pattern there and holding above that 200 period moving average black line. So all in all, actually on the Heikin-Ashi chart, looking very positive. Now a lot to pull off from the Renko chart today. Box size 0.7, again to be a bit more aggressive with potential signals. At the moment the signals at the bottom there are bullish, although we've had a downturn there in the regression to a more neutral state, just as the price reverses off of recent highs around the sort of mid 180 area. Now if we go into the chart, I put on a yellow sort of rectangle block to highlight where most of the price noise has been since the beginning of 2021, late 2020, and it's between 170 and 184 dollars. We did see around March time it break out through that area, and more recently we've seen that 185 area tested, which was hit previously sort of July time, and then we go back into sort of May where there was a lot of noise and support and resistance sort of zones around there. Now in terms of the current price action, it's just pulling back down a bit into the bands we've got on there, the two orange lines. And in terms of Fibonacci analysis, well, we got a downside support at 177, 38.2% line, and then down to 170 area was 61.8 line. What you'll notice here, are there extra Fibonacci lines. That's because I put on a short term and medium term, because I like to look for an overlap or near proximity of the longer and shorter periods sort of aligning to give me more of an idea of stronger price zones. Now, I said that early 170 is one of them, because we've got that 61.8 longer term and 23.6% shorter term Fibonacci line, and then that upside there 184 to 187. So it's a useful way of just coming up with sort of more confirmatory Fibonacci analysis. And if we go downwards, then 162, 160 could be a zone where the price pulls back to, in say more the medium term. And looking upwards, it's got to break through that 184, 86 area to try and get up to those highs, you know, but it's got to get through the 193s and then to the 200s, and if it can do that, the next Fibonacci area is around the 210, 212 area. At the moment then, the Renko chart looking, I'd say, a bit more neutral at the moment, but with an underlying bullishness to the picture. So with all that information, let's go to the summary. So I'm going to give Disney an overall bullish picture, and we're talking more medium to longer term here. The short term just pulling back slightly to make it a bit weaker, but overall a good positive picture in terms of the technical analysis. And if we focus in on the targets, we can see, you know, good risk reward to the upside for bullish trades. You know, the downside also has some, you know, leg room, but I think it slightly favors the upside at the moment. So overall, Disney looking reasonably bullish. Now, it's not my job to comment on the fundamentals, but if they can get themselves out the other side of the COVID pandemic, then in terms of the technicals, things are looking quite positive. Now, let me know in the comments below what you think of Disney and where the price is going. Do you trade it? Have you got any strategies around it? Let me know. And if you've liked today's technical analysis and want to learn more, then I'll put a link in the description below that you can follow to find out other information and stuff that you might be interested in. And if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of further content I'm going to produce just like this. All that's left for me to say then is thanks for watching, good luck with the trading, and I'll see you in the next video.